Hi, I'm Mark Milne, Finance Director for the town of Barnstable, and this is a review of the town of Barnstable's financial condition. I'd like to begin with what I often refer to as the town's financial report cards. The first one being the town's annual financial audit. The last financial audit we had conducted was as of June 30th, 2023, and we received an unqualified audit opinion or a clean opinion on those financial statements. In addition, the town is subject to single audit requirements under federal regulations, and no findings or questioned costs were found in any of our federal awards programs. The town's assets exceeded its liabilities by $420 million as of this date, which was an increase of $60 million over the previous year. The town's governmental funds reported a total of $192 million in fund balances, which was an increase of $33 million over the previous year. The town's general fund balance equals 38% of the general fund expenditures, which is an increase of 4%, all positive trends for the town of Barnstable. In addition, the town's June 30th, 2024 audit is in process, and we plan on having that done by this December. Our next report card is the Standard & Poor's credit rating. Annually, as we issue a general obligation bond, each one of those issuances must have a credit rating assigned to it. Standard & Poor's reviewed our financial statements, and in June of 2024, they issued their credit rating for the town of Barnstable, which maintained our AAA rating with a stable outlook. They consider the town of Barnstable to have a very strong economy and a very strong tax base. We work within a strong institutional framework. We have a history of strong financial performance and the maintenance of very strong reserves. We have manageable debt burdens, including our pension and OPEB liabilities, and our social and governance risks are credit neutral within that analysis. Next, we'll move into the town's budget performance and review our reserves for June for 2024. In 2024, the general fund and all 9 enterprise funds had a favorable budget variance, as this table illustrates. The general fund had a $12.6 million favorable variance, as we plan to use $8.2 million to balance the budget in fiscal year 24, but we actually generated $4.4 million in surplus, resulting in that $12.6 million favorable variance. This table illustrates the certified free cash amounts as of July 1, 2023 and 2024. We just received the 2024 certification from the Department of Revenue. And as you can see here, 5 of our enterprise funds had an increase, 2 enterprise funds had a slight decrease. The sewer enterprise fund had a sizable decrease of over $5 million, but this is only related to a timing issue. As we build out the public sewer system, we have to incur those expenditures up front, and many of them are financed through the Mass Clean Water Trust. And we have to gather the information and submit for reimbursements on those expenditures to the trust, and that takes some time. So as of June 30th, we had several $1 million of outstanding reimbursements due from the trust, which results in this temporary reduction in the sewer enterprise fund reserve. Once we receive those reimbursements, the reserves will be restored more closely to what the certified amount was in 2023. And in the general fund, we had a reduction of about $1.8 million as a result of appropriations made from the general fund reserves for the 2025 operating and capital budgets. This chart illustrates the free cash as a percentage of the FY25 operating budget for our enterprise funds and the general fund. We like to see all of our enterprise funds at 50%, at least 50%. Most of them are there, with the exception of solid waste and the Highness Youth and Community Center. And the general funds percentage is at 15.3%. Our town council policy reserve is set aside 4%, so we're well above the town council's policy reserve. When it comes to the reserves, the traditional thinking on using those reserves is that the tool for one-time expenditures or startup funding for new programs, or to provide some rate stabilization, to accumulate assets to pay for future liabilities, and to provide some short-term service stabilization in the event of economic downturns. Some of the new thinking that we apply towards reserves is using them as a risk management tool. One of those risks is cash flow risks because we have weekly expenditures and we bill on our tax bills on a quarterly basis, and therefore there's a cash flow risk associated there. We have revenue instability from time to time, and these reserves provide us a softer landing during those periods of economic contraction. We also use these reserves for uninsured events. And as insurance becomes more and more expensive, we look for ways to increase our self-insured activities and assets to try to manage those premium increases that we see in our insurance policies. The table illustrates the amount of free cash used to balance the FY25 operating budgets, as well as what was used for the capital program, for the enterprise funds and the general fund. You can see we used over $12 million of general fund reserves, and that amount certified as of June 30th, 2024 takes into account this $12.1 million. So after we use the $12.1 million to balance capital and operation budgets, we still had close to $31 million in general fund reserves. Other sizable or notable reserves that we have as of June 30th, 2024 include our Capital Trust Stabilization Fund, which is used for our general fund capital program. We have our Sewer Construction and Private Way Fund with $18 million in it, and that's for our comprehensive wastewater management programs, as well as certain private ways. We have a Comprehensive Water Management Stabilization Fund with $7.6 million, which is for sewer and water capital. We have a Water Supply Stabilization Fund with about just over $700,000 in it, and that's used for water capital and water rate stabilization. We have over $11 million in our Community Preservation Fund that is unrestricted. We have over $11 million in an other post-employment benefits trust fund as we accumulate assets to meet that unfunded liability. And we have $4.7 million in a workers' compensation trust fund, as this is a self-insured program for the town of Barnstable. Next, we'll move into a review of our general fund revenue. We'll begin by talking a little bit about assessed values for the town of Barnstable. This chart illustrates the growth in our assessed values over the past 10 years. The town's assessed values have gone nearly doubled from about $12.5 billion to almost $25 billion in fiscal year 24. And as you can see, most of that growth has been in the residential class of property, as residential real estate has really taken off, especially over the past couple of years post-COVID. As a result of those significant increases in overall assessed values, the town's tax rates have seen a decline over the past 10 years. And really, the change in those assessed values impact or result in that decrease in the tax rate, as this chart illustrates. The blue line represents the growth in the tax levy on a percentage basis annually. And you can see that's been below 5% pretty consistently. It's around the 3.5% to 3.6% increase a year is what it averages. But as those assessed values go up, that's what really impacts the drop in the tax rate. When you see an increase, a significant increase like we did in FY24 in the assessed values, and in FY25, you see the decrease in the tax rates. Those increases in assessed values also contribute to the town's override capacity, as this chart illustrates. Even though the town's tax levy has increased from $111 million in fiscal year 16 to $150 million, what we're projecting for fiscal year 25, the town's override capacity has more than doubled from $218 million to $469 million. The override capacity can only be accessed through a ballot initiative and a voter's approval. But this just illustrates that as a result of those significant increase in assessed values, the town has significant taxing ability, but only with voter approval. This chart illustrates what the town's new property tax growth has been over the past decade. You can see we've seen some significant growth since fiscal year 2022 in our new property tax growth, and we're projecting about $1.7 million for fiscal year 25. This has been submitted to the Department of Revenue for the review, and we're waiting to hear back from them. These are our top 10 taxpayers in the town of Barnstable, pretty consistent from year to year. We had one new taxpayer join this group last year in Vineyard Wind, which is a new public utility subject to personal property taxes. Their total valuation for assessed purposes in fiscal year 24 was $60 million. And in fiscal year 25, we expect that valuation to almost double to about $115 million, which will result in them being the third largest taxpayer in the town of Barnstable. This chart illustrates the state aid trend over the past decade. You can see we had some pretty sizable increases in fiscal year 23 and 24. All are mostly as a result of Chapter 78 increasing as a result of the Student Opportunity Act, but then it leveled off in fiscal year 25, and we anticipate those increases in Chapter 78 to be minimal for the foreseeable future. We won't see increase. We're not expecting to see increases like we did in fiscal year 23 and 24 in terms of Chapter 78. But overall, our state aid has more than doubled from about $12 million to just over $30 million over this time period. A local receipt trend has been strong in the upwards direction, as this chart illustrates. Most of that growth has been in the categories, especially in fiscal year 24, has been in the categories of motor vehicle excise tax and investment income. We've seen some pretty strong increases in the investment rates that we're able to earn on our excess cash deposits, which resulted in some very strong investment income in fiscal year 24. And in fiscal year 25, you can see this chart illustrates what we used for a budget estimate in order to balance our operating budget. It's about $6.4 million overall, less than what we actually took in fiscal year 24. So that provides us a little bit of a cushion and the opportunity to estimate revenues a little higher as we go into the fiscal year 2026 budget development. A couple of other local indicators from that measure our local economy are our meals and rooms tax revenue. And this chart provides you an illustration of the meals tax revenue change over the past 10 years. You can see we took a dip in fiscal years 20 and 21 as a result of COVID, but then it came back very strong in fiscal year 22 and continued to grow in fiscal year 23 and 24. And we're projecting slight growth in fiscal year 25. Same thing with rooms tax revenue. You can see in fiscal year 20 and 21, for traditional lodging, we saw some reductions in our rooms tax revenue, but then it came back very strong in fiscal year 22 and 23. But then we saw a slight drop in the rooms tax revenue for traditional lodging in fiscal year 24, and we're projecting about a same amount in fiscal year 25. For vacation rentals, the growth has been strong, not like the traditional lodging. It has continued to grow, and in fiscal year 24, we had nearly $2.5 million of rooms tax revenue from vacation rentals, and we're estimating a similar amount for fiscal year 25. Next, we'll move into our general fund expenditure drivers. Being a service provider, most of our operating expenses are associated with salaries and wages and associated benefits that go along with those employees. And in fiscal year 25, our general fund budget includes about $110 million in salaries. So every 1% increase in those salaries adds about $1.1 million to the operating budget. All of our municipal collective bargaining agreements have been negotiated through fiscal year 26. and all but one of the school's collective bargaining agreements have been negotiated through fiscal year 27. Associated with all those salaries and wages are the pension assessments. We belong to the Barnstable County Retirement System, and as a result, we receive an assessment from them every year. The FY25 actuarial determined contribution for the Barnstable County Retirement System was $89.3 million in order for them to stay in line with their funding schedule, which will pay off that unfunded liability by fiscal year 37. And the town's share of that annual required contribution was $12.6 million. The funding schedule provides for a 5.8% increase in the actuarial determined contribution through fiscal year 37 in order to pay off the unfunded liability of the pension system. And that ADC is allocated based on each entity's covered payroll. And the town is currently 14.74% of the overall Barnstable County retirement system. A change in that covered payroll percentage or in the investment performance of the Barnstable County retirement system's assets can have a significant impact on that assessment in either direction. The average increase over the past 10 years has been about 5.2% or $508,000. Also associated with the workforce is the cost of health insurance. The budget for fiscal year 25 includes $13.8 million for active and retired employees. Active employees, the town pays 70% of the healthcare cost, and employees pay the other 30%. For retirees, it's a 50-50% contribution. For every 1% increase in the rates, in health insurance rates, can increase the town's budget by about $145,000. And the FY25 rate increase was 8%. The other significant cost driver in the town's general fund is the capital program. We see submissions for the capital program increasing every year. We have the last 5-year plan submitted included $263 million of general fund capital program. In addition to that, we had $432 million in comprehensive wastewater management plan capital requests, and some of that is being financed by the general fund now. And in the enterprise funds, most of those capital programs are funded through rate charges to users, with the exception of the Highness Youth and Community Center. Most of their capital program has been part of the general fund's commitment. So for the capital program, the town of Barnstable contributed $16.2 million of its operating budget towards that area of the budget. We increase that budget every year by 2.5%, plus an additional $750,000 through fiscal year 27, as we try to allocate more resources to the capital side of the budget. The acceleration of that capital program and the comprehensive wastewater management plan results in upward pressure on the budget, because as more and more capital projects come forward and we increase the contribution towards the capital side of the program, it results in less available resources for the operating side of the program. In addition to the CWMP, last year we had a comprehensive school facility study conducted, which will contribute to the upwards pressure on the capital side of the budget, as it identified over $130 million in identified capital needs for the school. This chart illustrates the town's growth and its commitment towards the capital program in terms of budget dollars, as well as a percentage of the tax levy. The blue bars illustrate that the town has increased its annual commitment towards the capital side of the budget to about $11 million a year to $20 million. So it's been nearly doubled over the past several years. And as a percentage of the tax levy, that has grown from about 10.4% of the tax levy to 11.4% of the tax levy. Fund a lot of this capital, we have to issue general obligation bonds. And Those bonds, of course, incur interest rates. Loan rates have gone up across the board for all of us on an individual basis as well as a town basis. And you can see the increases here that we've seen in interest rates. We were enjoying very low interest rates on our general obligation bond issues for several years, many of them being below 2%. But now we're seeing interest rates back up closer to the 3.5% to 4% mark, and we expect them to continue to be in that range for this foreseeable future. In terms of the town's outstanding debt, blue bars here illustrate the town's outstanding debt over the past several years, and the orange color represents the authorized and unissued debt. Between issued debt and authorized and unissued debt, the town of Barnstable has close to $400,000 as of June 30th, 2024. You see that large increase in orange color for fiscal year 24, and that was a result of about $170 million of borrowing authorizations for our sewer expansion program most recently. The green line represents the debt limit in accordance with the town's administrative code, which says that our outstanding debt and authorized and unissued debt combined can exceed 2.5% of the town's equalized valuation or assessed valuation in any given year. And right now, that number is just over 600 million. So we're a couple of $100 million below that debt limitation within the town's administrative code. Now, the state law allows the town to have 5% of its equalized valuation or assessed value outstanding at any point in time, as well as authorized and unissued. So as we build out this sewer expansion program, we will likely need to amend the administrative code as we start bumping up against that 2.5% limit and change it to reflect what the state law allows municipalities, which is 5%. Next, we'll move into our fiscal year 2026 preliminary general fund budget projection. First, the current general fund fiscal policy states that the general fund operating budget must be constructed within the limitations of Proposition 2.5. Any remaining new revenue growth after providing for fixed cost increases is allocated currently to school and municipal operations on a 60% to 40% basis. Fixed costs include funding for that capital program, which consists of a 2.5% increase to the base and an additional $750,000 through fiscal year 27. Our general fund savings or free cash can be used to balance the operating budgets and fund the capital projects, of course, subject to town council appropriation. And any general fund surplus that is generated by unspent appropriations and revenue exceeding budget estimates are credited back to the municipal and school savings accounts. And we must continue to maintain an amount equal to 4% of the general fund operating budget in that town council reserve fund. So that in the current allocation of the free cash results in $11.1 million in the municipal savings account, $11.3 million in the school savings account, and $8.5 million in the town council reserve. And all total, that's about the $31 million of free cash that was just certified. Here is our projected revenue growth for fiscal year 26 by major category. The property tax levy is expected to increase $5.5 million or 3.7%. Again, that includes 2.5% increase to the base tax levy in accordance with Proposition 2.5 and a factor for new property tax growth, which we're currently estimating at about $1.2 million. We have other taxes increasing $1.3 million, most of that being motor vehicle excise, as we continue to see strong growth in the motor vehicle excise taxes. State aid is expected to increase just under $700,000, most of that being in the form of minimum aid in Chapter 70. Charges for services are going up $300,000. Fines and penalties, we're estimating an increase of $1 million as we have a more aggressive outstanding tax collection program in place, and we're seeing some good results from that. And other revenue is going up over $1.9 million, and this is where investment income is. We had very strong performance in our investment income in fiscal year 24. We expect that not necessarily to be repeated in fiscal year 26, as we do expect interest rates to go down. And so we're taking advantage of some of that opportunity to increase this revenue estimate, but not to the point where it actually performed in fiscal year 24. And then the large decrease you see in transfers in is our attempt to work ourselves or to reduce the amount that we're using out of our free cash reserves to balance the operating budget. We have a plan in place to reduce the $6 million that we used in fiscal year 25 to balance the operating budget over a multiple year period. And we're beginning here by reducing it by $2.8 million in fiscal year 26. Next, our fixed cost increases are projected to increase $3.3 million. And that includes $1.5 million for employee benefits. Again, that's the pension assessment, health insurance increases, and other fixed costs, $1.4 million. That's where the capital program funding comes into play. So that's what that increase is. And as a result, we end up with $4.9 million projected to be available for the municipal and school operations. And if we split that on a 60% and 40% ratio, if we continue to split it that way, it results in an additional $2.9 million for school operations and $1.96 million for municipal operations. Finally, this table illustrates historical budget percentage change for the general fund over the past 10 years. You can see the most recent years, 23, 24, and 25, we've had some of the largest budget increases post-COVID. As we came back out of the pandemic very strong, we saw some strong revenue growth in Chapter 78, as well as our local receipts, which allowed us to increase our operating budgets by over 5% in fiscal year 23, 6% fiscal year 24, and 8% in fiscal year 25. However, fiscal year 26, as I showed you on the previous slide, our projected budget increases are more in the 3 to 4% range, which is in line with what we've averaged over the past 10 years, which has been about 3.4% for the municipal operations, 4% for the school operations, just under 4% for fixed costs, and about 3.7% overall. That concludes my presentation. Thank you for watching.